Oh, finally we had a breakout.
Yeah.
Oh,
It
oh
has to
we're
be.
live.
Yeah, I'm going to ask you about that, yeah, first. I will start and then let you go.
Oh, okay, we're live, I see.
Okay, seems we are live. So, hi everyone, and welcome to this live coverage. We are here with Yohay Elam from ForexCrunch and me. We are all on our own today, so hope you enjoyed the show. We are going to cover live whatever the Bank of England decides on its economic policy. But this can be today understood as an isolated event, right? We need to and whatever happened yesterday, hi, Yohai, that's what I'm going to ask you. What happened yesterday in the market?
You tell me. No, well, finally we had a breakout. I was very, very happy to see that, especially euro dollar. We were so frustrated, I think both of us and perhaps millions all over the world. I can attribute it to what we heard yesterday from um, Bill Dudley, which was a bit dovish, not very surprising, but a bit dovish. The market wanted to sell dollars, and he helped us out. And of course, the poor ISM non-manufacturing PMI, which showed that the services sector in the United States is not really doing well, and that sort of gave the final blow to the dollar. Dollar fell 2% across the board. Very nice breakout here against euro dollar, broke out of range, and that's my explanation anyway. How do you
Yeah,
see things?
I do believe that it was the consequence also of the tight range we had before, right? But indeed, data in the US, it's been soft, lately. So I do believe that that has a lot to do with, and Dudley just pulled the trigger
Yeah.
by letting the market know that the Fed had said that there is a chance they will raise rates 4 times this year, and if data continues softening, particularly GDP reading was soft also. The Fed said that economic growth slowed late 2015, and January data is not doing any better. Overall, the market has decided to give up on those four bullish those four rate hikes. So I guess that's what happened yesterday. Still, I do believe that the market overreacted a bit. If not, take a look at whatever happened to the dollar Japanese yen. It fully erased all the Bank of
Yeah.
Japan decision and plummeted to lows in Jan and record lows that 615.95 we had. So actually, I do believe that it has been huge. So we can talk about the Bank of England without taking into account what happened yesterday, sorry, because the pound also broke higher. I was taking a look at my chart, and that steady decline we have, the pair passed through the 38.2%. Like if it was not there, most pairs
Hmm.
pass through resistance or supports, like if they were not there. And so far, we're stalling around just around the 50% of the same rally, but and somehow today, Bank of England is less dovish than we expect, and the rally can extend, right? Little chances. What do you think? How are we with the chances of what may happen today?
Yeah, the pound already did get some. Well, the pound was hit by Carney when he said it's not time to raise rates, and then got some kind of boost when we heard that there's some kind of a deal between the EU and the UK to keep the UK in the European Union. But of course, the biggest move came from the dollar dive yesterday. I also expect the Bank of England to be dovish. I think also the last half hour in which we see a fall in cable perhaps reflects worries about markets. Yeah, if we don't get anything extremely dovish, we could see a continuation because the dollar is really weak. The first reaction, I believe, will come from the voting pattern. If we have, again, 8 for no change and only one Ian McCafferty voting for a hike, it could be bullish for the pound. If we have a unanimous 9-0 vote, it'll be dovish. And then, of course, it all depends on the meeting minutes, on the quarterly inflation report. I think, yeah, but as you said, there are some expectations that it'll be dovish.
Do you think someone will vote for a cut, or it's too early to talk about a cut in England, given what happened in Europe, Japan, and so on?
I don't think so, because central banks move a bit slow. They need to get all the signals. Yeah, but in general, I think it could come on later this year, because we do have this kind of race to the bottom, these currency wars. The Bank of Japan must be frustrated. It was only 6 days ago that they hit the yen so hard, and now, at least against the dollar, it's gone.
It's higher, yeah. Not much difference with the euro-Japanese yen, you know. We're, less than 1 cent away from the pre-news levels. Anyway, I'm not sure what we are going to hear today, but I do expect some kind of downgrade in the forecast also, inflation and growth. For what we have been seeing lately coming from UK data, the fact is that the manufacturing sector has been doing pretty bad, and the services sector is the one doing the best. I believe it's a situation that, repeats in Europe and in the US, right? But I don't believe an economy can grow just with the service sector. We are really need to see some growth in manufacturing additional. If we don't have growth in manufacturing, crude oil will remain pressured, then that will trigger risk aversion, and we will keep on with this scenario, right?
Yeah. Price of oil was a bit crazy yesterday. We had a rise in inventories of crude oil, a rise in inventories of distillates, or a smaller fall than expected. The price of oil did dip below $30, but then again resumed its rally. So
I do believe that the rally we saw yesterday was all about dollar sell-off, you know, not much. Anyway, I was following this in the crude, and we have a complete retracement toward the 61.8% of the latest decline, and 1, 2, 3 fail, and here we go again, and now the highs at the 50. So there's a good chance that, in my opinion, of course, that if we take this next Fibonacci support, we can go even lower. Anyway, I don't see a bright future for crude at the time being, you know.
No, there's just too much oil going around. So
yeah. So I do believe that yesterday stockpiles in the US, with the latest readings you were telling about, reach highs not seen since 1930, meaning 100 years ago almost. So it's crazy, right? Anyway,
where do you keep that?
Yeah. What's your take technically on the euro dollar? Where can we go from here?
The lines we're back to lines last seen in October. So I see 112.15. Well, I have actually quite an old line, not that strong. Really strong line is 114.60 to the top side. Perhaps 113 could also be some kind of barrier. It's been messy back then in October. 114.60 was just a strong line during 2015 and 1,000 pips above the multi-decade lows. To the downside, it's 110.70 and 110. What are your lines?
Yeah, well, I do agree with you. Most of the level, we have the 200 simple moving average in the daily chart. I have it at around 10:30, and yesterday it passed through it like it was not there. Also, the euro take several levels like they were not there. Also, 11:20 was quite a strong support resistance area all through the end of 2015 for me. Also, so I do believe that pullbacks to that level can attract some short-term buying interests. But we really need to break below that 1050, 1060 region to talk about a downward move. So far, so bullish, right? The pairs are extreme, indicators are in extreme levels due to yesterday moves 200, 250 pips, like if nothing, after days and days of less than 100, and that's what distorted a bit at technical readings. But well, the price is held near their highs or their lows, and that means that the trend is still alive and the indicators can correct without too much reaction in the price, right?
Yeah. Yeah, still there.
Yeah. Okay, 4 minutes to go, guys. Almost there.
Some levels in the pound, I guess. 148 is a round number to the top side, and today's high is 146.65. Downside 145.60 is some kind of support, I guess.
Yeah, I was following in my forward charts. I always said this, but I know it's quite relevant. This purple line I have is the 200 exponential average, right? Exponential, not simple one. And it's usually a huge market support resistance and a leading indicator, right? It's telling you where the trend is. And although it's not a trading signal, sort of, and the fact is that we passed through it and the 38.2 of the latest decline, and they're all together around 45.20 or so, right? There we are. So 25.20, 25.30. So as for me, as long as the pound holds above this level, it has room to continue correcting higher up to the 48 region, you know. But if we take that level and we continue falling from it, the bearish trend can resume. It's not just breaking through the level, it's also price acceleration beyond it, like we saw yesterday, that led to further advances, right? So higher highs should turn it higher, and then it will become a support and should go with the price higher, in the bullish case, of course. And there we go. But for me, this is now a major support level, support area.
Yeah, so looks bullish, no?
Yeah. And gold, we have not been in here for what? Also October here, right? Yeah. Really good floor formation this round. The floor is amazing how it's developing. Seems we're heading farther higher in here. I do believe that the fact that the Fed, it has traded alongside, depending, on the Fed for most of 2015. So now the chances of a hawkish Fed all through this year has diminished somehow. Gold has the path clear towards the upside, in spite of China, I must say.
Yeah.
Anyway, 1 minute to go. Guys, remember we have a bit of delay, so you will see the news first in your calendar and the reaction in your charts, and a few seconds later, Johan and I will be starting commenting about the outcome, right? Keep that in mind. Okay, cross your fingers, let's have more action.
Yeah. 145.90 at the moment, and less than a minute to go.
Yep.
I'll first look at the voting pattern and then
great.
The headlines. So we're gonna.
Oops. When was that? Okay, here we are.
9-0, 9-0.
9-0, yeah. More dovish than expected. Pound plummeting.
Yeah.
Let's see how that 45.20 region acts if the pair continues sliding.
Yeah, it's about 30 pips. It's a mess. After the initial fall, we have some kind of retracement. So Ian McCafferty is not rebelling anymore. He's voting with the majority.
Yeah.
But maybe this was sort of a bit priced in, because in the half hour before the release, we had the pound falling already.
Yeah. But so far, not much of a reaction. Let's see what the minutes bring.
No.
Statement.
I think the reaction came before the
Yeah.
publication, as it often happens with the pound, that it front runs the market, begins moving before the release.
It's clear that the market was expecting a dovish stance, particularly because every single central bank has been dovish this month. The ECB, the Fed, Australian, Bank of Japan.
Yeah, even in Canada, where they didn't cut, they did say that they're waiting to hear from the government, but their bias is to cut. So.
Okay. So. The war keeps going.
Race to the bottom.
Yeah, currency wars. Pound weakness due to concerns in global economy. First headlines coming up.
Yeah. Weakness, concerns. We have two documents, actually, the meeting minutes and the quarterly inflation report.
Yeah.
I think the inflation report is a bit more important because of the because it's quarterly. Yeah.
Yeah. Inflation report. I keep on following the EUR/CC, not because I attempt to trade it, but because of I'm surprised that the SNB is doing whatever it's doing in silence, in complete silence.
Oh yeah.
But they are in the currency wars too.
Yeah, Thomas Jordan, the governor of the SNB, said at the beginning of January that we should see a weaker franc, and since then, that's what's happening.
Yeah. Okay, the pound is reversing its losses and struggling to regain the 46 level. Very, very limited price action we had. I really hope we have more action lately in the day after the US data release that is regarding employment. I know there are minor reports, but they usually tend to move the market, given that we have payrolls tomorrow. The day before payrolls, they tend to move the market. But anyway, guys, keep in mind that the market can go to sleep and wait for tomorrow's payrolls, right?
It happens many times when there's just tension before the NFP and everything is paralyzed.
Yeah, it can happen, particularly in the dollar-Japanese yen and the euro. Could also because of the extreme run we had in here. Okay, pound was unable to regain the 46 level, but still remains quite limited in terms of reaction, right?
Yeah. Yeah, we had a range, I would say 100 pips since half an hour before the release and the lowest after the release.
Yeah.
And now we're back to the range, to hugging 146, which was sort of the average level during the morning here in Europe. Okay, the Bank of England lowered inflation and growth forecasts.
The same that we were talking as possible before we started, right?
Yeah.
No surprise for the market. Actually, no surprise at all. We are all expecting the all central banks to be extremely dovish. So if they are not, currencies can even recover ground. But from a technical point of view and join with this macro release, the fact is that the pound has been unable to fall, right? The pound is holding. So that is telling us that if we can close this hourly candle to the upside, it will tell us that the bulls have taken over the pair, right?
Yeah. that the weakness of the dollar is the overwhelming force.
Yeah, and
Meaning
therefore,
even the dovish. Sorry?
yeah, and despite whatever bad news we have from the Bank of England, the pair will continue rallying.
Yeah. So this dovish event from the Bank of England could be an opportunity for a break in the rally, but the tendency remains to the upside. Now we're seeing a bit more of a slide, 145.75.
Sorry. Sorry. The OC is doing pretty well also. It has recovered from the latest slump. I'm not sure if Glenn Stevenson is going to like it. He was happy. He is happy when the OC is around 70. That's his optimal target, right? Optimal price.
The sweet spot.
Yeah, that. For the first time, yeah. Tell me.
And Australian economy isn't doing so bad. Employment is rising, building approvals, other figures, GDP, inflation, they all look quite good. Of course, the big worry is China. And
Yeah.
Also, the Kiwi dollar had one of the strongest rallies. We had a very good employment report from New Zealand this week, and this, together with the weakness of the dollar, and despite weak milk prices, we had yesterday a rise of 2.5%. So see if we get more headlines from the BoE.
Yeah, the pound is challenging lows post news, but still high. Pretty disappointing market reaction, right?
Yeah. Growth forecast cut to 2.2% from 2.5%. Makes sense, but not so extreme. I mean, seems they are reacting to reality, not shocking markets. What else can we say?
Little what a disappointment. The rest of the currencies barely reacted to the news. They are holding near the highs or lows, so there has been a
Just say also euro pound is rising because the pound is weaker, but again, this began before the publication. And pound yen is a bit lower, also it began before the publication.
growth slashed, inflation slashed, and the pound doing little about it.
Yeah.
Guys, we're too disappointed.
Yeah.
Let's see if inflation report is something more.
Do you have the inflation forecast numbers?
No, I'm looking for them. I have just row. Concerned about this. Market. I'm trying to make a read of a monetary policy statement. It's like 10 pages. Let's see if I can see something, but I can't find it. Sorry, guys. I can't. Let's see if someone is quicker than me and post it on Twitter.
I see only that they expect CPI inflation to exceed the 2% target slightly at the 2-year point and then rise further above it. So they're talking about the distant future.
Yeah. Yeah, unfortunately, there's nothing about it.
So 145.70. 145.44 was the low, but we had a quick rebound.
Yeah, over the past 3 months, inflation has smuggled in the US central banks. Inflation report. Yeah, I'm taking a glance. I'm not actually reading, but what I can tell from this inflation report is that they're mostly hoping that inflation returns to the 2% and anything else. Not they're going to take any more measures. Not that they're seeing it going there anytime soon. For the most, there's a wait and see stance in there.
Yeah, hope is not a strategy.
Yeah. And the pound keeps trading merely a couple of pips below its previous.
Yeah.
And the euro is 10 pips range, in the 10 pips range. With so many aims to break higher, the euro continues rally. Okay.
Euro dollar is at the highs. Yeah, 111.80 almost. So all in all, we're back to the starting point, 145.85.
Yeah.
Also, the Bank of England, like the Bank of Japan, or like Draghi, must be disappointed that when they go dovish, it's not enough. Okay.
Yeah. Well, guys, there's not much more to add. I think we will wait a couple more minutes, but I do believe that we will have to wait either for US opening and see if Wall Street has another negative day, which will result in a slump in the greenback, or we will have to for tomorrow to see some action. But overall, I believe that there's little chances of a dollar recovery at the time being, and that pullbacks will probably be seen as buying opportunities in the short term, right? In fact, we have very, very shy pullbacks even in the pound with the dovish Bank of England.
Yeah. Yeah. All in all, I think we had expected markets did expect the Bank of England to go dovish. They were, I think, a bit more dovish than expected, with 9 members voting against the change and only 1 voting for a rate hike. But the reaction already began before the publication, with pound dollar falling from the highs to around 146. We did have an immediate reaction to the downside, but it's basically all erased. The past 15 minutes we had the pound falling about 45 pips and coming back all the way up again.
Okay, do you want to start wrapping up the session with something else than that? You already said it. Not much to wait for. I do believe that we are at new frontiers in the currency world, and that a dovish central bank will be no longer a surprise this month, next month, right? They need to actually act, because wording may not be enough these days. We have verbal intervention many times, for example, in the Japanese yen, and anyway, the pair did not react until they actually announced more easing, and even in that case, it lasted 4 days, right? So beware of central banks betting too much on central banks, because market reactions are quite limited in there. I do believe that dollar still leads the way, because the market, it's all about the greenback on whether the Fed will or will not raise rates. What we are seeing, the sell-off we saw in the greenback, it's because of that. And so either for good or for bad, the greenback will be continue leading the market. And for the pound, as I said, as long as we remain above that 45.20 level, I won't be expecting much of a bearish movement in there, right? As I said a few minutes ago, Wall Street and maybe payrolls can give us a bit more clues, but at this point it's on the greenback. Okay, I believe that's pretty much it. Am I missing something, Yohay?
No, I certainly agree. Dollar used to be king, now it's slave.
Yeah.
I guess perhaps somewhere tomorrow or late today we will see the markets stopping, getting stuck a bit in tension towards the non-farm payrolls. Until then, it's a negative trend against the US dollar, and even when the Bank of England, as I said, goes dovish, it's probably not enough. They have to go extremely dovish in order to really weaken the pound.
Yeah, in fact, take a look at the euro. It's a couple of pip higher already.
Yeah, dollar is really, it's a big sell-off.
Yeah. Anyway, I guess we will see back tomorrow, guys. Thank you all for being here. Thank you to Yohay and Adinda, who has been producing with us. Thank you so much for being with us, you guys. And see you back tomorrow. We're going to be here with Dave Pinkert, the 3 of us as usual, to cover live the non-farm payroll report, and hopefully we will have a bit more of price action, right?
Yeah, we will. I'm optimistic.
You have faith. Okay, that's great, Yohay. Okay. Thank you, everyone. Bye-bye, and see you soon, Yohay. Bye-bye.
Okay, see you all. Ciao. Bye.